Blake Bos here, folks. Today we're going to be talking 3D printing. We're going to be looking at Stratasys' UPS agreement, and then we're going to move on to 3D Systems earnings. Today we had Stratasys selected by the UPS store to be a provider of 3D printers in a few of their stores. The UPS store has around 4,700 stores in the U.S. The program with Stratasys will start by installing its uPrint SE Plus printers in 6 of those locations beginning in San Diego, California. Obviously this is a very small program, but if test sites go well, maybe Stratasys will be able to get into a larger amount of stores and build awareness for their brand. I think it's good they're getting their foot in the door here, but shareholders shouldn't take too much away from this news item. It's just a very small program. Like I said, it's looking like around 6 printers will be sold because of this. Also on the docket, they will be reporting earnings on the 8th of August. Any surprises around this earnings release will be a very big deal to the upside or downside. And then also moving on, we have 3D Systems that's already reported earnings. They reported 30% organic growth. That was up compared to the previous quarter. They also doubled their R&D from last year. Print material revenues were up 12% year over year. Printers and other product revenues were up an astounding 108%. They maintained their guidance for the year, and earnings per share on a GAAP basis was down 0.9%. My takeaway here is this is a strong quarter for the company, highlighted by strong printer sales, and good to see that increased R&D spending that Wall Street has been asking for. As a business, they're doing wonderful, but in my personal opinion, I'm worried shareholders are being diluted and not taken along for the success that the company is experiencing. 3D Systems is financing its growth via share offerings, as evidenced by its shelf registration statements of the past and going forward. I don't blame the company for raising equity at today's prices. By all means, if I own 3D Systems, I'd finance my expansion with equity if my shares were trading at 12 times earnings. You see this at other companies like Tesla as well. I'd caution investors that do want to invest in 3D printing and 3D Systems in particular to not use a valuation method based on non-GAAP earnings. I think you should use GAAP earnings, or better yet, look at that cash flow statement when you're trying to evaluate how much you're paying for a company in the 3D printing space. That's all I have to say about 3D printing today, folks. Thanks for watching, and Fool on.